Right. Okay. So here we are. We have question 98, a question on goodwill. I recommend that you have read and practiced some of this before you get here, so this becomes more about working through the material, working through the question. So we know that when someone's coming into a business, joining a partnership, we have to revalue the business because the other existing participants have worked hard to build this intangible asset of goodwill that does not show on the financial statements. So it's very possible that someone could be coming into a business and gaining an advantage where they haven't worked. This is the new person, right? Because you just turn up. Because the legal way it works with the profit sharing ratio, you share everything. So if you sell the business in the next day, you will share the value of that whole business according to your profit sharing ratio. So it's really important to acknowledge or get that new person coming in to pay for this intangible goodwill that we cannot see, if you like. And the way we do this is what we're about to look at, right? So it says here that Reagan joins the partnership and she introduces 120,000 into the business. So what we have to do is we need to create these capital accounts for Cordelia and Goneril, right? That's the important thing. And then just before Reagan joins, we have the goodwill. We now recognize the asset of goodwill, and the goodwill is recognized at 105,000. I mean, it is an asset, 105,000 split between Cordelia and Goneril. So that's 35% times 10500. So Cordelia gets 36,750, and 105,000 minus 36,750 and 68,250. So that's the initial recognition, right? The initial recognition here. The initial recognition. Now, what we now have is the fact that Reagan is joining this business. And yes, fair enough, Reagan has paid in 128,000 into the bank because that's what she's paid, right? She's paid 128,000 into the bank. But she also has to contribute something towards this goodwill. So what we now sort of say is, listen, what she has truly contributed is, we're going to do that now. So what we now do, the process of doing this, I'll change my pen color to red. So this is how you have to do it. You just have to do it like this, is to now resplit or get rid of this goodwill by resplitting it out of the goodwill account. So we sort of say, well, 25% of 101, where's my goodwill, of 105 is 26,250. 26,250. This is Cordelia, 26,250. So you can see what I'm doing with my double entry. Then I do 45% times 105, and that's 47,250. That's 47,250. And then the final bit there, which is 30% times 105, and that's 31,500. 31,500. Right now, and that's how. And so now the goodwill account ends, and that's how that closes out. Now, I really want to show you something that's really important. Look, if you look here carefully, right, you will see that what's actually really happened. If you look, this is the net goodwill of Goneril. Let's look at the net goodwill. That's the difference between this and this, right? Isn't it? And that's what? 68,250 minus 47,250. And that's 21,000. This is 21,000 net on this side, on the credit side. If you look here, you will see that your net of 36,750 take away 26,250 is 10,500. So the net is 10,500, right? Now, if you notice what we've really done, we could have done this and sort of said, listen, what we have here is Regan giving some of her capital to Cordelia and Goneril, right? And we just do it through this very somewhat long-winded process. But if you add these two figures together, they are exactly 31,500, right? They're exactly 31,500, right? Okay, so let me now look in here to see whether it says that show the entries required to introduce the goodwill into the partnership. So you can see, so that's what's happening. That was this account. That was this first thing that I did here. So that was debit goodwill, which was 105,000, and then I shared that between Cordelia. I gave her 36,750, and then I gave Goneril 68,250. So that's the first way we introduce it. And then you can see I took it out once I had done everything, right? They didn't want the rest of this, obviously, but I've just shown you the theory of this again. Who knows what you might get asked, right? So that was that. Then the question says that Cordelia is thinking of leaving the partnership next year. It is estimated that 22,000 would have been added to that. So calculate the goodwill to be introduced into Cordelia's account. So let me just clean all of this off and deal with this. So what we're saying again now is that this time our goodwill has what we now have is a scenario where at the end of the year, let's imagine that our goodwill is now 105,000 plus the 20. It says that she's added 22,000 to the goodwill. So our goodwill now totals 105 plus 22,000, and that's 127,000. So goodwill is now 127,000. So we first of all split this according to their profit sharing ratios, if you like. That's all we're doing, actually. That's all the question is asking. It's sort of saying that by this time you're goodwill of this, so no problem. Split it according to these shares. So that's Cordelia, that's Goneril, and that's Regan. So 25% of this, 25% of that will go to Cordelia, which is what this question is really asking. To be honest, 127,000. And that's 31,750. And I would do the same. I'll take 45% of that and I'll put it here. I'll take 30% of that and I'll put it here, right? Now, that's all this question is asking. Now, that's 31,750, but I'm going to extend this question a little. That's 31,750. Now, what should happen? The question should go on to say, now that Cordelia leaves, Goneril and Regan will stay in the business and will share things, for example, 50-50. So what you would then do is you will then split, get rid of this goodwill 50-50 in both of their accounts. So, and you will get, and that's how you get rid. So in effect, what's really happened is that Goneril and Regan have given goodwill to C. That's really what's happened, right? So that they can carry on in the business, because Cordelia deserves to leave the business with this intangible asset that we cannot see, but we have just shown she deserves to leave it, the business with that asset. Cool, great stuff. And that is question 98.